All right, everyone, here we are with ticker symbol WWR Westwater Resources Inc. And before we jump into this chart, welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. So there's been a lot of hype with this one, and it has had a run. Yesterday was incredible till today. And earlier in the month, it had been running, it leveled off. And like I said, from yesterday, it rose up pretty significantly, almost like twice as much as what it was worth, and today had another run and it reached highs here at $14.94 and lows of about $9.29. And the 50-day moving average is moving up fairly quickly with it. So if the bulls don't maintain this momentum, this could quickly end up in bearish territory. So we're going to look at the resistance levels and support levels here that are important for this stock. And we're also going to see what is important for tomorrow. The 50-day moving average right now is below the closing price. That's a good sign for the bulls. But like I said, it's catching up to the price and it's quickly moving up. And if the bulls don't continue the momentum, this could be on its way down to newer lows and end up in bearish territory. So this momentum needs to continue and reach newer highs and continue to grow. It has been growing for the last couple of days and it's had a lot of volume. So we're going to look here at what's important for tomorrow. So the first thing is it's closed off, or it's going to close off fairly close to $14. It's jumping around right now, $14 and $13.97. If it moves up a couple cents, give or take, by 8 o'clock, I mean, after hours, it already has risen almost $3. It was at $11.80 and we're at $14. And if it continues to rise, it could almost hit $3 after hours. It's an exact amount of about $2.20, but it's moving its way up. That's a incredible catalyst. But the 50-day moving average is down here at 871. Super important number. As long as we're above it, bulls are in control. Like I said, this is going to continue to catch up to the price. So the bulls need to continue to load up on stocks and work their way up, bounce up to newer highs, break through resistance levels to stay away and move further up from the 50-day moving average. That's the most important thing here for this stock because it can quickly turn around. So the most important number here is 1498. It's the highest point reached in the day. The bulls need to break through that, turn this resistance into support, and break through and hit newer highs. On the other spectrum, which is the lowest point before this run continued, is down here at 1013, and the bears are going to try their best to break through this. If they break through this support level here of 1013, there's a small window of uncertainty, and I'd pay very close attention to how quickly is it moving closer to the 50-day moving average, or is it kind of just hanging out there and the bulls are going to try to reappear because we're still in bullish territory. But if the bears accomplish breaking through 1013, I'd pay very close attention to the behavior of how quickly is this moving closer to the 50-day moving average, because once the 50-day moving average of 871 gets broken through, this will be on its way down into bearish territory and could start to see newer lows and hit new support levels. But right now, just pay very close attention to how quickly this is moving and how it's reacting and behaving if it breaks through 1013, or if it gets close to it and the bulls use it as support to bounce back and continue to work their way up. But the most important number here is 1498 for the bulls. They need to break through that resistance level to work themselves further away from the 50-day moving average in an upward direction. As always, if you found this video helpful and informative, please do so and subscribe. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. Well, at the end of this video, that pop-up video, I actually go into deeper detail about the S&P 500 index, and I just want to break it down a little bit to you guys and see what it is that I want you guys to watch. I know I've been saying it in my last couple of videos. Check out the video, and you're like, well, what does that do for me? I'm just looking for the ticker symbol. I want to see the analysis and so forth. Well, this right here is great news for us as investors right now, present day. I know that the Federal Reserve pumps have an effect. A lot of analysis say that, and experts in the future. But right now, in the present, how can you continue to maximize profits? Well, it's been awesome to see the S&P 500 rise the way it has in such a great recovery due to the fact of these pumps. I'm not sure if that trickle effect is already starting to show that these pumps have had an effect where it can actually start going in the other direction, or if this is just due to the fact of the time of the year, people taking profits, the uncertainty that's coming up, or fear, or so forth, right? So that is something that I am already seeing how quickly this is actually fallen. But you can see as it's been falling down that these pumps still have an effect on the market by bringing it up several points. And we're going to go into that in just a moment into detail. But this has been rising up, and it was a great run. It hit highs, and from this point forward, it actually started to fall and it became more turbulent. The volatility has always been there, but these pumps were actually supporting the market on rising up. But we're going to look at the pumps now because this is the state that we're in. We're not in that bullish run anymore. So I'm going to pull this up. These are some of the most recent pumps. This was released right back on the 14th of September, and the next release date is October 14th. So the first one was on the 15th, and we're going to look at that in just a second. The second one was on the 22nd. The third one was on the 29th, and the most recent and upcoming one to be the recent one is 10/6, October 6th. So we're going to look at those dates. So the 15th, this was September 14th. It slightly dipped and it ended off around 33.83, and the next day was the 15th and it rose up to 34.18. That right there is a rise of several points for the S&P 500 index. And again, 21st rising up, and we land on the 22nd. So the day pretty much ended and started here at 32.61, and the end of the run, because then comes the 23rd, the end of the run on the 22nd, which was the date of the next pump, it reached up to 33.21. So again, rose up several points. Now the anticipation here for the next pump and the week that was coming, the end of the week started really strong, started the week strong on Monday, and it started to dip on that Tuesday of the date of the pump. Well, guess what? The pump actually saved it from hitting newer lows and actually created momentum to continue to rise up because it hit 32.28, and before the day ended, it rose up to 33.49. This is actually one of the pumps that I've seen the pump do the least effect in rising it by several points, but I have seen the pump do this before, stop it from going in this direction and rising it back up, creating an attractiveness to the market to bring in obviously more investors and obviously do this effect to bring it up. And then obviously the volatility of the market is normal to be seen like that. So we're anticipating the next one, but what I want to talk about is what does it mean for us as investors that these points of the index are rising up? Well, if the index of the S&P 500 is rising up several points, that means that it is rising up and there's 500 ticker symbols within it. Some of them, not all of them, are rising up with it. So individual ticker symbols are rising anywhere from 30 cents to up to $3, maybe even more. But I have seen ticker symbols rise on the dates of these rises and these points rising on the index. Individual ticker symbols rise 30 cents to $3 per share. I know that doesn't sound like a lot. It sounds like, oh, well, it's 30 cents. Oh, it's $3. I know it sounds small, but per share, it does add up. And I'm not saying that it guarantees you profits, but profits are profits. And I always say that in all of my videos, especially when I'm talking about this. And this is an opportunity to maximize profits and minimize your losses. I'm just encouraging you guys to check out the video. I go into more detail about it. I just wanted you guys to see with your own eyes the dates of the pumps and what it has done. And if we go back to previously reaching these highs and dipping, this pump of the scheduled dates was rising this up in an upward direction. I mean, here are some notes, and I also had notes here, but I deleted it because I didn't want those notes to go ahead and confuse people in the upcoming pump dates of over here. But something that I find interesting is, yes, On the dates of these pumps, the market was rising up to newer highs, reaching newer levels, and going up to the point that it hit these highs. But on the way down, on the dates that the market is rising several points, I mean, you do see it several times before, okay? That's good. But on the dates of the pumps, it's actually rising. It's actually rising. It's actually leveling off, rising, creating momentum to go to the next level. And it actually rose due to the fact of the anticipation of people knowing that there was probably an upcoming pump. So many investors know about this. A lot of people aren't speaking about it, or they're unaware of it. So I'm here to share with you guys that there's an opportunity to maximize profits and minimize losses. Click on the video, check it out. I go into more detail about it. I hope you find it helpful and informative. And thank you guys so much for watching, and let's make some money.